The gold is only compounded at 1.7%, so it's harder. The better stock to flow on gold than on fiat currency. Bitcoin, as it continues to get mined and as the halving adjustment continues to be applied in every 4 years, is now sounder than gold, and in terms of the dilution per year, and ultimately it's going to, asymptotically approach zero, so that there will only be 21 million Bitcoin in existence, and that's a huge fact. And I think as people come to see and understand that, more and more people are going to say, gee, if I want to save money, really save money for my retirement, something not for next year, I'm talking about years and years down the road, I have to save in the soundest form of money. And Bitcoin is the soundest form of money. No, I was going to say, a lot of people think they're too late. And I disagree with that. I don't think you're too late. I think it's going to many multiples of where it is today.
Lawrence Lepard begins by addressing the increasing recognition of Bitcoin as a response to persistent inflation. Despite the 10-year bond market suggesting otherwise, Lepard argues that inflation is a significant and ongoing problem unlikely to be resolved soon. Bitcoin, he explains, attracts people for various reasons, but the most compelling is its resistance to inflation. Unlike traditional forms of money, including gold, which experiences a 1.7% annual supply increase, Bitcoin's supply is capped at 21 million coins. This fixed supply, combined with the halving process every 4 years, makes Bitcoin the hardest form of money ever created. Lepard highlights the historical context, noting that all forms of money have been subject to inflation, even gold. Government-issued fiat currencies, since the end of the gold standard in 1971, have compounded at around 8% per year, significantly devaluing over time. In contrast, gold's annual increase of 1.7% makes it a better store of value. But Bitcoin's inflation rate will eventually approach zero, making it superior. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think what's going on in Bitcoin is a slow but sure recognition by more and more people that inflation is a persistent and serious government problem that, even though the 10-year bond market says is likely to get solved, in reality it's probably not going to get solved anytime soon. And so people come at Bitcoin for a lot of different reasons, but or they buy Bitcoin for a lot of different reasons. But I think the largest one is the notion that here we finally have a form of money that can't be inflated. And for 2,000 years, David, or more, every form of money in the world was subject to inflation, even gold. Gold goes up 1.7% a year, the supply, and over 40 years that means the supply of gold doubles. So there's inflation in gold. Now, it's not very high compared to government inflation, which, if you look at the growth in the underlying money supply and fiat currency from 1971 to present, it compounds at like 8% roughly. So that's the monetary inflation the government has created. The gold is only compounded at 1.7%, so it's harder. The better stock to flow on gold than on fiat currency. Bitcoin, as it continues to get mined and as the halving adjustment continues to be applied in every 4 years, is now sounder than gold, and in terms of the dilution per year, and ultimately it's going to, asymptotically approach zero, so that there will only be 21 million Bitcoin in existence, and that's a huge fact. And I think as people come to see and understand that, more and more people are going to say, gee, if I want to save money, really save money for my retirement, something not for next year, I'm talking about years and years down the road, I have to save in the soundest form of money. And Bitcoin is the soundest form of money. If for some reason people are older, and I have a lot of clients like this, and they don't like Bitcoin, and they're worried about the volatility in Bitcoin, they say, what should I do? I say, well, you save in the second soundest form of money, which is gold. It's not as volatile, and it will maintain your purchasing power. Bitcoin, interestingly enough, has two things going for it. One, it's sound money, sounder than gold in terms of stock to flow. But the second thing that has really going for it is there's an adoption curve taking place. And so this is why it's performed so well in the last 15 years. And, right now we estimate maybe developed world penetration of Bitcoin might be 10%, maybe a tad less. And, using Malcolm Gladwell's tipping theory model, if it took us 15 years to get to 10%, the next 15 years we're going to go from 10 to 90. And that's what I see going on. I mean, you can look at the number of addresses being added. You can look at the hash rate. You can look at a lot of different measures of the soundness and the health of the Bitcoin network. And as I like to say, the dogs are eating the food, and there are more dogs coming to the party every year. And so for that reason, I think Bitcoin is going to continue to appreciate now. Admittedly with volatility. Obviously the Sam Bankman-Fried example. That whole blow up. Created an enormous opportunity for people who could, think long term, because I was paying $15,000 for Bitcoin in 2017, and when SPF and those guys blew up, it went back down to 15,000. What a buying opportunity that was. No, I was going to say a lot of people think they're too late, and I disagree with that. I don't think you're too late. I mean, I think it's going to many multiples of where it is today. Bitcoin ready for central bank adoption? Probably not. I mean, it's you've got thousands of years of tradition. And you've got a 15-year-old technology, and central banks are large and extremely conservative. And so, you've got El Salvador as a central bank. They've decided to add it, but they're a very small country, and it's one case. I think you probably got a couple of other central banks that on the QT are buying it, but not talking about it. But I think it's probably not quite ready for that level of adoption yet. And by the way, that's another reason why there's going to be a place for gold. I mean, if the U.S. has a monetary crack-up, which I think is some possibility of something like that occurring, I think the odds are reasonably good that the initial impulse is to reset with gold, not Bitcoin. That quote-unquote Bitcoin's not ready, or we're not ready for Bitcoin. I think eventually the countries and everybody will be. I mean, to my way of seeing it, and this is probably beyond my lifetime, but to my way of seeing it, this is kind of like, I see this as being very similar to the Microsoft analogy. I mean, in the early 80s, when PC came out, I met Steve Ballmer, and he explained to me how this was the core base layer of running these PCs, and every house was going to have 5 PCs, and I couldn't see it. But he said it was true, and he said this company's going to be enormously huge, worth billions of dollars. And because he knew what PCs would evolve into, or he believed that what they would evolve into. And if I look at Bitcoin, I think the same thing is going to occur. I think in 30 or 40 years, the dollar is probably going to be replaced by Bitcoin. Now, 40 years is a long, long period of time. But because of its technological innovation, because of its monetary properties, I think it will probably be adopted. I mean, it's human beings tend to gravitate towards the thing that works the best. And in terms of storing value, for the past 15 years, Bitcoin has worked better than anything else. So I think that alone is going to lead more and more people. The adoption is going to continue, I guess, is the point I'm trying to make.
He emphasizes the importance of understanding Bitcoin for those who are not yet comfortable with it. Bitcoin has been the best performing financial asset in history, and Lepard believes this trend will continue. He advises investors to educate themselves about Bitcoin's potential and the role it can play in their portfolios. Lepard discusses the role of gold in predicting future inflation. Gold, he says, is adept at sniffing around the corners and anticipating economic changes. He recalls how gold anticipated the inflationary impact of the COVID-19 pandemic, rising significantly before the crisis fully unfolded.
Well, I think the S&P is somewhat at risk because you're buying the S&P at the high end of the range. And as recently as the last 20 years, we've had 2 S&P drawdowns at 50%. Now, if you can live through those, fine. But if, having a 50% drawdown on the S&P is going to be rough. I would say that, and I think one might be coming, I would say that if for some reason you can't find your way to buying Bitcoin, your second best choice clearly is gold. It's rarely drawn down more than 20% a year. I think once or twice it did. And it will preserve your purchasing power as it has for 5,000 years. So, and interestingly enough, I've done the math. The S&P since 71 as an example. Let's take that as a good point to start at because that's when we went off the gold standard. The S&P 500 on a nominal basis has not beat the appreciation in gold unless you reinvest dividends tax-free. And then it only beats it. It's like the difference between 8% on gold and 10% on the S&P. So, stocks have not really outperformed gold. So I think, it's very clear to me that gold is your best choice. But let's go back to your initial premise. I mean, you're not comfortable with BTC, Bitcoin. I would suggest that people really owe it to themselves to do the work to become comfortable with it, because it really is going to matter. And it really is. It has been the best performing financial asset in history, the best performing financial asset for the last 15 years. And as a result of that, I have every reason to believe that pattern is going to continue. Gold is really good at sniffing around the corners, and looking around the corners. I mean, I think what gold, we all look at the monetary situation, and I say we, those of us who are Austrian in background, look at the monetary situation, say, this is messed up and it can't continue. And the gold market, I think, is kind of a good measure of kind of the Austrian economic views. And I think what the gold market smells is that they are going to have to print a lot more money at some point in the future. And the market's saying, you know what, I want to get in front of that, even though they haven't started that printing process yet. I mean, it's interesting. I mean, we couldn't foresee COVID coming, and yet, and gold was kind of trapped below 1365 in 2019. And yet we had the repo blowout that year, and gold went from that 1365 up to 18 or 1900 before the repo blowout. And so, again, gold kind of sniffed out the future inflation. I think that's what's going on. My belief is we'll probably end the year at 3,000 gold plus or minus. And the thing I think it's important to understand is just how asymmetric gold is, how little gold there is in the world, and how much fiat paper there is in the world. I mean, there have been great studies that have shown if you go back into the 70s and you look at the amount of the money supply in the United States, you divide it by the 261 million ounces that the U.S. owned, you could get close to the reference price of $35 an ounce. If you did that same math today, all the money outstanding divided by the ounces we own, gold would need to be $80,000 an ounce, and it's at 2,300. Now, I'm not suggesting we're going to go to anything close to that number, but what I am suggesting is that the suppression of the price and the ignoring of gold by most investors for the past 10, 15 years, because in a deflationary world you didn't feel like you needed it, I think that's set to violently revert in the other direction, because I don't think we live, we had deflation from the early 80s all the way into 2020, and I think that changed. We hit peak deflation in March of 2020 with the COVID crisis, and now I think we live in an inflationary world. And if that's the case, then gold and silver are going to be multiples higher of where they are today in 5 years or 10 years, and Bitcoin will be too.
Lepard forecasts that gold will continue to perform well in an inflationary environment. He predicts that gold prices could reach around $3,000 per ounce in the coming years. The scarcity of gold relative to fiat money, combined with increasing monetary supply, sets the stage for significant price appreciation. He concludes by emphasizing the asymmetric nature of gold and the vast amount of fiat currency in circulation. Historical studies suggest that if the money supply were divided by the US gold reserves, gold would be valued much higher than its current price. This potential for mean reversion makes gold an attractive investment in the current economic climate. Please like and subscribe my channel.